Okay, good evening, everybody. Let's go ahead and get started. Like to welcome everybody here. I also want to give a shout out to those of you watching this in the recording. Want to say hello to you guys. But yeah, happy Wednesday, everybody. Happy Wednesday evening. Thanks for coming to hang out with me today. I've got a good webinar set up for tonight. I think you guys will like it. Got several things we'll discuss with that new overnight trading strategy. I'm excited. I'll show you some more back testing that I've done tonight. I'm also going to show you I took some time today to go over our statistics on this overnight trading strategy. Took some time to go over like our average win to average loss, win loss ratio, just anything you'd like to know about the strategy, which I think will be very helpful for you guys to see. But yeah, anyway, like I said, I just want to welcome everybody here. Before we get started, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you guys take a trade. All right, guys, well, let's go ahead and do this. So first, I want to start off. Um, Before we get into the statistics of the overnight trading strategy, I want to make sure that everybody knows how to trade it. So, I want to go over the rules of it again. This is a strategy that we taught last week. I want to make sure everybody knows the rules of it, which pairs to trade, it kind of like the methodology of why it works and why we're trading it and all that kind of stuff. And then you can decide from there, even if it's a strategy that's worth trading on your side, on your end, right? And then, like I said, at the end, we're going to go over the statistics. I have my spreadsheet all pulled up with the numbers. Like I said, I spent time this afternoon going over those, all the different metrics that anybody would like to know. Okay, so first let's talk about how this works and what it is. So we have this, like I said, we built this new overnight trading strategy. It's pretty cool. It's basically your typical London breakout, but it's a little bit different. Okay, so the way we trade this is different. And last week we did talk a lot about the methodology, so I don't know if we'll talk too much about that tonight. But basically, the concept of this strategy is to take advantage of the pending breakout that will inevitably happen in the London session. Okay. And not only that, but it does a lot of other unique things too. Like we take advantage of the fact that your average win to average loss ratio is so much bigger and better. One of the things that I've been doing is I've been increasing my lot size after um, subsequent losers with the idea that you're getting closer to a win. So I am using a type of martingale, not full martingale though. I'm not doubling down. I did do that in May and I had good results. I don't think it's a sustainable strategy to double down on trades. So I've kind of stopped doing that. And I don't want you guys really to double down. I think if you double down on trades, it could have some immediate success, but I don't think it's something that you could do long term. And so if you're going to embark on increasing your lot size, it needs to be controlled. You need to put limits on it. And, there has to be a game plan. You can't just perpetually continue to double down. And even then, like I said, I don't even like the idea of doubling down. Okay, so let's talk about the methodology here. So if you were to pull up, I have this really cool indicator on my charts here. It's called sessions. And this is on TradingView. So if you go to TradingView and go up to indicators and you search sessions, there's actually several different session indicators that you can use. I think the one I'm using is it's called Sessions on Chart by Aurochs, but I could be wrong. I'm trying to remember which one I'm using. And anyway, all of these would work. The only thing that you need to be able to do when you pull these up is um, you need to be able to go up to your settings and you need to change you need to go to your inputs and there needs to be an option to select Sydney, Tokyo, New York, and London. Those are the four sessions. So if I flip all these on, it's actually going to light up my charts here. In fact, I want to see if can I change the color of these? I think I can, but I don't really want to right now. So like if you look at this chart, this is an hourly time frame on the euro dollar. So you can see it's all very colorful. on my screen here kind of looks like a flavor of ice cream or something. I don't know. Just these are all the different sessions, right? And their subsequent overlaps. So if I go back to the settings and I turn these off, let's go to settings and let's go to inputs. Let's just turn on London only. So if I do London, London is in this, you can't really see it. You know what I'll do? I'm going to make my background dark so you guys can see this better. Okay, here we go. Now you can see it. Okay, so everything in green right here is the London session. So anything in black is outside of the London session. What do you notice about London? Let me just kind of go through here. I'm going to let you guys tell me. We don't have a huge crowd tonight live, but if anybody's brave enough, let me know what's something you notice about the price action. Just give me a simple observation that you notice in the chat box if somebody's willing. Let me know, what do you notice when you look in the green? What's different about the green versus everything in the black? Just give me a little, let's see if I can get some participation there. Anybody notice anything about the price action? Yep. Okay. Oh, cool. We got a couple of answers. Yep. Yep. Jen says it moves up or down sharply. Yep. And then Mohammed says black is more consolidation. Correct. Yep. So black would be, the off London session and usually more consolidation. So right here is your London. Yep. You both got this right. That's exactly what I was hoping you would say. And that's correct. Yeah. So if you look here in London, a lot more movement going on here, and then you got a lot more movement here, and so on. Let's go back. Yeah, see, here you go. A lot of movement here, and outside of it, not as much. Okay, so something that a big takeaway we can get is out of all the 4 sessions, you've got London, New York, Sydney, and Tokyo. Those are the 4 different trading sessions. They each last 7 to 8 hours, each one. That's how long they're in session out of 24 hours in a day. The big takeaway about London is that London is your 73% of all foreign exchange transactions occur during the London session. So the vast majority of all trades ever taken or that will be taken during a 24-hour period will in fact happen during London. So when is London open? Because that would be a great time to trade, wouldn't it? Yeah, so that's when the big moves are happening. That's when the banks are alive and well. That's when most traders are active, is during London, right? So when is it London open? So London opens, I'm going to give this in Eastern time zone. So kind of figure out what this is for you. London opens at 3 a.m. Eastern time, and it closes at 12 p.m. Eastern. So it's open for 9 hours.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So if you live on the East Coast, it's really hard actually to be at the market exactly when London opens. It's pretty late because you'd have to, if you wanted to be there, it opens at 3 a.m. And then it closes at 12 in the afternoon around lunchtime. So good 9 hours where it's open. Now, if you live like on the other side of the country, let's say you live in the Pacific, it opens at midnight and it closes at 9 a.m. Okay. So the vast majority of the time in the United States, it's actually, I would say it's mostly closed. When especially at the beginning, I live in Mountain Time Zone, so it opens for me at 1 a.m. in the morning, and it closes at 10 for me specifically. But um, yeah, and then I don't know where everybody, watching this is living in different parts of the world. Some people might be watching this in Australia, or somebody might be watching this in uh in Brazil or South Africa or something. And so you'd have to figure out what that time is for you, but that's the general time when that 9 hour period takes place. Okay. So the reason why this is important, this is the methodology here, is prior to London opening up, the market is generally consolidating. Okay, so there's a lot of sideways movement during that time. And so a lot of people over the years have made these London breakout strategies. Okay, and the market makers know about this. This is a pretty classic retail trading system. And some of it doesn't really work. In fact, the market is random enough that, and you'll see this in a second when you see the back test, that half the time it'll work out great and the other half it won't. But you might be like, well, why would you trade it then? Actually, that's one of the reasons why I trade it, is because it is so random. Like half the time the market breaks out perfectly and the other half of the time it doesn't. And so that actually provides a huge opportunity, because it's like a equal amount of randomness to the market, which is actually really good. I'm going to explain that in more detail. That may not make a lot of sense, but bear with me and I will explain it as we go along here. Okay, so this is the most important part, is knowing that there is consolidation before, it's kind of quiet, and then when London opens, boom, big things happen. All right. Okay, so the strategy we put together focuses on, I'm going to actually turn off the London session here, and let's turn on Sydney, because Sydney is what is open before London opens. Okay. So in fact, let's actually turn on both together. I'm going to turn on London and Sydney at the same time. So you'll notice that Sydney's in this kind of like dark blue or purple. I'm not sure what color that is exactly. Color blindness runs in my family, so I'm not exactly sure. So I can just tell that that is green though. So the green is your London, and the purple or blue, I'll leave that up to you and debate what color that is. Um, that is your Sydney. Okay, so Sydney is before the green, and again, like I said, you'll notice that Sydney is a lot smaller and doesn't move as much, but or the London does. So if we come in here, um, let's actually, I'm going to show you the strategy in some detail here. So like, for example, here's a good one. So we call this the Sydney box. Okay. So there's 8 hours of trading. Is it 8 hours? Let's see. Sydney opens for me at 4 p.m. and it closes at midnight. So it's actually open for 8 hours. So I'm going to give this to you guys in Eastern time zone. So Sydney opens at 6 p.m. Eastern. Yep. 6 p.m. So you might want to write that down or just remember it. That Sydney opens at 6 p.m. Eastern and it closes at 2 a.m. Eastern. Okay. So about an hour before London opens. Okay. So we call this the Sydney box. So it's all the price action that happens during Sydney from its highest high to its lowest low. Okay, so that's the Sydney box. Okay. And the idea with the London breakout is that you're trying to set up a buy stop above the highest high of Sydney. And this is like the traditional way. We don't quite do it the traditional way. I'll explain that in just a little bit. With the Tokyo breakout, people put a stop loss on the other side of Sydney, and then they put their target, out here somewhere. Okay, so this is a traditional London breakout strategy, is to put your stop loss um, down here on the other side of Sydney and your buy stop at the very top. Okay. And then what a lot of traders will do as well is they'll place a sell stop trade at the bottom of Sydney, and they'll put their stop loss at the top of Sydney, and then they'll try to capture some kind of breakout. So either way, you're guaranteed to get into a trade. Okay. So as you go to bed, you set this up like one of the last things you do before you go to bed. And when you wake up in the morning, you're guaranteed to have entered into a trade. I have yet to have a day where I have not entered into a trade. That's how significant the London breakout is that you're guaranteed to trade. There has not been a day where I have not triggered. So long as you set up your Sydney box, the market will in fact break out of the Sydney box um, at some point the following day. Okay, while you're asleep. Okay, so that's a traditional setup right there, is you're just looking for a breakout. What I do instead is a little bit different. You guys have seen me do this. Now, last week I showed you guys how to do this. I don't put a stop loss on the other side of Sydney. I actually put it halfway through Sydney right here. So I still put the buy stop at the top of Sydney, like right here, on top of the Sydney box. But I put the stop loss halfway through. And I may change this in the future, but for now, it's worked very well. I don't think you need to have the entire box risk. I don't think it's necessary. There will be a few times where you're going to be like, "Dang, I wish I had the full box," or you got whipsawed. But there have been plenty times where I've been fine with just using half of the Sydney box. It's been fine. So so I put it halfway through. So if this is a total of, let's see, let's measure this out actually. Let me grab the measuring tool. Um, this is approximately 17 pips. So about half of that would be like 8.5 pips. So that's what we would do, is we'd put our stop loss about 8.5 pips into the Sydney box. So something like that would be the trade. And then what I do is I do a 1 to 3 RR ratio. So 1 to 3 would put you like right there. 1 to 3 RR. Okay, so I do a 1 to 3 RR. So you have to figure out your stop loss first, and then you can figure out your target. So it has nothing to do with price levels or anything like that. It's just all about getting a stop loss in that's half of the Sydney range, and a take profit that's 3 times your stop loss. That's literally it. And then you just do the same thing on the other side. You place a sell stop down here, and then at the bottom of Sydney, and the stop loss goes about halfway through. Take profits about 1 to 3. Okay, so this is again pretty like that's what I've been doing with this. Okay. So you're just trying to take it whichever way it decides to go. Okay. So, which is cool because if it goes up, you buy. If it goes down, you sell. Makes sense. Now, what's the downside to this? Because it's pretty cool, right? Actually, real quick, I just want to clean up my charts here. I think I am going to turn this back to white. For me, it's hard to see if it's dark. So I'm going to go back to white, and then hopefully you guys can see. Maybe I'll go back to dark if it's hard for you guys to see, but I like the white chart a little bit better. But let me know. Okay, so oh, I forgot. This goes at the bottom of Sydney, so right there. There you go. Okay. And so yeah, if the market breaks out, you're gonna buy, and if it breaks down, you're gonna sell. And so what's the risk with this? So the biggest downside to this overnight trading strategy is I'll give you some scenarios here. Let's say the market goes up and triggers you into a buy. And then all of a sudden, an hour into the session, it just pulls back. You're going to lose on that buy and then you're going to enter into a sell. And then what if that sell triggers and then the market goes back up? Well, now you're going to lose both directions. So when will you lose with this strategy? So you're going to lose when the market does a whipsaw. So a whipsaw is just where it whips into your buy and then goes the other way, whips into your sell, and just basically flounders during the London session, which does happen frequently. So this happens to me about 2 times a week. Okay, sometimes up to three. I don't think I've ever had it happen more than 3 times a week. Um, but yeah, this will probably like normally this is going to happen up to 2 times a week. So what will happen is you'll set this up and you'll wake up in the morning and you'll find out that you lost two, not only one trade, but you lost two trades. So this is not for the faint of heart. Like if you take losses, in fact, if you take losses hard, this is going to be a terrible strategy. You're going to hate it. And in fact, honestly, newsflash, you're going to hate trading because trading's full of losses. Um, we're going to get to the statistics page here in a minute. This strategy has about a 30% win rate. Okay, so you might be like, "Whoa, 30%." The thing is, it makes money. Like the average win is so much bigger than the average loss that it makes it totally worth it. But I just want you guys to know that right now that there are plenty of times where this, this will in fact whipsaw many days and multiple times a week even. And you got to be prepared for that. Okay, so there you go. That's an okay. So what's the ideal scenario? The ideal scenario is, in fact, I should have left that on, but the ideal scenario is you set up your Sydney box and then the market triggers into your buy, which this did right here. And you have your stop loss about halfway through and you have your 1 to 3 RR ratio right here and you hit your take profit. That's the ideal scenario. This is an ideal day right here. This is perfect. In fact, it looks like you could have gone for a lot more, a lot more. Holy smokes. But I don't know how you would have known that. Well, I guess we'll have to back test to see if it's better to have an even bigger target. But yeah, you could really come away with a huge win if things go the right way in the market. Um, so this is an ideal scenario, okay? Is just where it triggers and it goes in your favor. And not so ideal scenario, let's see. So let's go through the different ones. So the ideal is that actually the most ideal is the buy triggers and you make your 3 times on that, and then the market reverses the other way, triggers into your sell right here and it wins the sell as well. So you win both directions. That has happened to me a few times. In the month of May, it happened to me once. Okay, so in May, I triggered into the buy one, then it pulled back really hard, sell triggered, sell one, and you won both trades. Very infrequent. That's probably the absolute best case scenario. Does not happen very often. Okay, but it does happen. The most common scenario I'd say is you just lose one trade. Like, and this is going to happen 2 or 3 times a week. You're just going to have one trade. You're just going to get whipped into one trade and it unfortunately loses. That's probably the most common. Second most common thing would be probably you whip into both trades and they both lose. And then the third is where one trade wins. And you might be like, well, that's not good enough. But let me tell you, like the statistics speak loud and clear. So we're gonna go look at those. But I wanted to pause here before we move on to the statistics. Does anybody have any questions with what we're doing or how this works, why this works, why we're doing this, all that kind of stuff? Um, okay, but if I'll let you guys kind of type in if you have anything, but I'm going to go ahead and go to that other screen and take a look at that. Danny says, what if you just pick one direction? You could pick one direction to go. The downside to that is honestly, we just don't know. Like we don't know which way the market's going to go. That's the whole point of this is to um, see what the market will give us and then just go with that direction. There have been many times where I thought the market was going to go up and instead it went down. And so I was glad I had a sell. And there's been times I thought it was going to go down, but it actually went up instead. So I was glad I had that buy stop, right? So that's kind of why I do both. Um, right. Um, let's see. Sean says, I set last night and I deleted the buy after the sell triggered. So I leave both open. Yeah, I still left both of mine open when I woke up this morning. I, I've closed what I typically have done is by lunchtime, if there's a trade still open the following day, I'll just close it. Okay, so that's what I've been doing. It's up to you guys what you want to do there. Um, but let me show you the statistics here. So okay. So I've done this a couple of different ways. In the month of May, what I did is after every loss, in the month of May, I actually doubled down each day. And I don't recommend this. Okay. In fact, I don't recommend this so much that I'm not going to do this myself. Okay. I did it in May. It was a fun trading month. I made like 21K. It was great. And you can see that down here. In fact, this is everything in May was live trading, and then everything from June. So we're at the beginning of June. This is hypothetical so everything in May was actual results from actual trading account. And then everything in June is hypothetical. And then I switched over to this 1.5 time X um, for my lot size. This is now live in June. So everything in June is like exactly how it is. Okay. So let's go with this one because this is the one that I'm adopting and this is the method that I'm using right now. So basically let's start off down here at the bottom. So in May, the first day of the month, I had one trade trigger. It was this sell. I'm going to zoom in so you guys can see this. Hopefully, you guys can see these results. I'm going to zoom down here so you can see on May 1st, I took a sell and that triggered and it ended up losing. And I risked a 1/4% risk right here, as you can see. And this is on a 100K account. So losing a 1/4% on a 100K is minus $250. Okay. The next day, oh no, the same day, actually, same thing on May 1st, the buy ended up triggering and it did, in fact, win. Okay. It made the 1 to 3 RR ratio and made $750. And so that covered the loss from the same day. So you made 750 minus 250. That's a net profit of $500. Okay. So when that happens, the next day I stay at the default. Okay. So the next day I did the same thing again on May 2nd. I went back to the normal 0.25% risk. I got triggered into a buy. The buy ended up losing, and the sell ended up triggering, and that trade won. So basically the same thing happened 2 days in a row. Okay, perfect. The next day, May 3rd, I stay at the default lot size of 0.25%. And that was a win. I got triggered into a buy and made $750. So far, this is like a perfect world scenario. Every day you wake up and you're just making a little bit more money each day. I mean, first day you net $500. The next day you net another 500. The third day you make net $750. This is looking pretty good, right? And then you get to let's see, we skip on to May 6th because that's a weekend, right? So you skip on to May 6th. And this is where things start to break down. So I had a losing day right here. Not too bad. This one actually wasn't even a full loss. By the time I got to the computer that day, it was only down $139. So it wasn't even a full $250 1/4% loss. It just lost 139. Nonetheless, that's what it lost. And so when you have a losing day, I like to increase the contract size. Okay. So I increased to 0.38%. All right. And if you pull up this calculator here, if you think about it, 0.25% times 1.5 is going to give you 0.375. So you could either do 0.375 or just round it to 0.38, which is what I've done. So I'd be risking 0.38% the next day. So that's what happened on May 7th. So since I had a loss the previous day, I increased by 1.5 times to 0.38. And now on May 7th, I ended up losing again. So this is going to happen a couple times a week is kind of what you're going to be averaging. So I got whipped in both directions, got triggered into a buy and a sell, and I ended up losing both of those. And I ended up losing $375 on each trade. Okay. Stinks, but it is like I again, this is for you guys to see, and I want you to imagine yourself trading this and asking yourself if this is something that you can handle or muster up. Because if it's not, this is a good time now to decide not to trade it. But I do want you guys to at least have a fair chance to see what this looks like as we go along here. Okay, then we move on to day two. Okay, so darn it, you put in your journal, you lost, you check your MT4 account, you're done. Okay, we move on for the day. The next night we come around, we set this up again, same setup. You draw up your Sydney box, you set up your trades. Now we're risking 0.57%. Why are we doing that? Because if you take 0.38% and multiply it by 1.5, that's going to give you 0.57. Okay, so that's what my risk is for this May 8th trade. And we set these up, and the same thing happened again, right? So I lost both ways. I got whipped both directions. Again, that's probably going to happen 2 to 3 times a week. So it's pretty common. Right. The next day we go along, we're going to set this up again. And now we're going to increase the lot size slightly again. So you go the 0.57 times 1.5 is the multiplier that I've been using. And that takes you to 0.86. Okay. When you round it, of course, right? So that's what you're going to be risking when you go through the lot size calculator on the website on like MyFXBook or Trade Assistant. You're going to be doing a lot size of 0.86% risk. Okay. This day was a winner. And this was that one day I was telling you guys about where I won both directions. So I won the buy and I won the sell. Very cool day. And this is where it just comes together. Okay, think about it. So this day you got bonus. You only needed one trade to win, but we ended up getting both of them, which wasn't even necessary. And it made $2,500, $2,580 each trade. So why the huge win? Like why is the win so big? Well, it's because of two things. One, you have a 1 to 3 RR ratio, which is better than most traders. Most traders are not getting 1 to 3 RR ratios. So you finally get a massive RR ratio win. But not only that, that's just one variable. The second variable is this is the biggest lot size in the sequence. Because if you think about it, you started with 0.025, then you went to 0.38, then you went to 0.57, then you got your win at 0.86. Okay. And the 0.86 at 1 to 3 RR ratio just so happens to be almost a $2,600 profit each trade. So let's do the math here, guys. So think about it this way. When you started this sequence on May 6th over here, you lost $139. Let's put this into the equation. Let's add this up. Okay, so we got minus $139. The next day, you lose two trades at minus 375 each. Minus 375. The next day, we lost another 570 each. Ouch, right? So you're down $2,029. That's about 2% on a 100K account total after 3 days of trading. Okay. Then you get this big win. One trade is all you really would have needed, right? You get plus 2,580, and that puts you now plus $551 over 4 days of trading. Not bad. Like we'll take not that's not great, but we'll take it. And then this day in particular was pretty cool because it wasn't, you don't stop there. You had a second trade that made $2,580. So you ended up making, if you average it out over those 4 days, yeah, it was 4 days of trading. It's 3,131 days. So if you take 3,131 divided by four, you're basically making $782 a day, right? Between those 4 days. So you're basically just churning, churning, churning. You're working, you're working, you're working. You're managing your lot size correctly. You're following the sequence. You're adding, you're getting that 1 to 3 RR ratio. And then all of a sudden you get that big win and it covers and you're back in business. Now, what do you do the next day? Once you get that big win, don't stay at the 0.86. The reason why we went up to 0.86 was to help us recover the trade and do well in the future. Once that happens, you go back to the default. Okay, so you go back to 0.25. Okay, so I did this 0.25 again, same thing. I lost the next day, lost the next day, lost the next day, got to 0.86 and won, and that covers again, that covers it. Okay, so in all, since May 1st, this has made $8,284. That's the net profit after losses. In fact, I've got some other statistics over here I want you guys to take a look at. So doing this, um, there were, let's see, total of 41 trades taken. That includes, a maximum of 2 trades a day because some days you trade twice, and most of the time, if you're gonna have 2 trades trigger, it's gonna be a whipsaw, but not always, right? Sometimes you'll have one trade trigger, loses, and the next trade triggers and it wins, right? It's sometimes like on May 9th, you win both directions. So that's, there you go. So a total of only 12 winning trades and a total of 28 losing trades. That's a win rate of about 29, a little over 29%. Okay. Which is crazy. You know what's funny? I get a lot of people ask me what my win rate is with my strategies. And the win rate, honestly, in my opinion, means very little because I know traders who win 90% of their trades and they're some of the most unprofitable traders you'll ever meet. And they win 90% of their trades. Okay. Why is that? Because the 10% that they lose are so bad. They're so incredibly bad that it doesn't matter that they won 90%. So 29% is okay so long as all the other things come out and jive together. So if you look at this, the gross profit from all the winning trades was over $21,000. The gross loss from all the losing trades was about $13,000 for a net of $8,283 in basically a month. That's a six-figure income from a 100K account. Very cool. Very, very cool. And then the average win, this is where we shine. Okay. So if you were to ask, if you that's the only thing you asked me, like what's the win rate, you'd be like, oh man, I don't want to be here. I'm only winning 29% of the trades. But the average win is almost $1,800. The average loss is about $467. Okay. So, the average win is over 3 times, nearing 4 times the average loss. Yeah, it's almost 1 to 4 when you compare these two against each other. So they're so different. These two numbers are so different from each other that that's how this 29% win ratio strategy is pulling out, um, a six-figure income a month just by doing this. And then the other cool thing I wanted to show you guys. Oh, I put this together too. Here on the right side, you guys will notice the net gain and the balance. So this is the balance from starting with 100 grand. So on May 1st, you started with 100 grand, and by the end of the day, you were at 10,500 or $100,500. And then you can kind of see the balance growth over time. There was only one moment where you went below your baseline. Actually two. One was right here on the first day. You had one trade lose $250 and you dug into your baseline by $250. And then there was a moment right here where you went into your baseline about a little less than $300. And then the next day it all came back together right here. And then let's see, it got kind of close right here on May 23rd. There was a string of losses for several days. and you got kind of close back to your baseline. But then the very next day, it all came back together. Let's see, it kind of dug down a little bit right here, and then it came all back again. So it's kind of cool. You kind of see it dip a little bit, kind of goes against you. And then when you have that winning day, it all come whips back in your favor. So I added this to kind of show you what your balance would be. So the worst drawdown I ever had from the baseline was like 0.3%, so very small. This would work very well on a prop firm that allows um, like that does an equity, not an equity drawdown, but a balance-based drawdown. So if you find a prop firm with a balance-based drawdown rule, this would actually work very well. Um, the worst drawdown as far as an equity drawdown goes, because I think was right here. This got up to $106,000 in balance, and then it went back down to almost 100 grand. So there was a 6%. Like if you have an equity-based drawdown, this was about 6% that it drew down from its highest point, and then it drew down about six, and then it all came back again. That would work for most prop firms because a lot of prop firms have a max drawdown of 10%, total drawdown of 10. And so if 6% is within that, you'd be fine. Um, but I would prefer a prop firm that does a balance-based drawdown because then you're definitely okay because you have your initial 10% plus any money you make on top of that to help you cover in case this thing starts to move backwards. That's why I like FTMO. FTMO does a balance-based drawdown. The only problem is they no longer accept American clients. So your options are a little bit limited that way. But you could also do this on a personal account. You don't just have to stop at the funded account either. Okay, so let me continue. Let me show you some of these other things here. So, yeah, I guess I showed you everything here. Let's see, anything else I wanted to show you? Um, No, I think that's basically the gist of it. So this is the current one I'm doing. So for as far as currency pairs, I like the euro dollar because it has a big breakout during London and it's usually pretty quiet during Sydney. So I want the smallest. I want currency pairs with really small Sydney sessions where the market doesn't really move a lot. And then I want currency pairs that move a lot during London. So the euro dollar is great. Pound dollar can be pretty good. Maybe even the pound yen could be fine. I think it might move a little bit more though during Sydney. So maybe not so much the pound yen, but that could be a good pair. You could even do this on things like NAS 100 US 30. So you could do this on futures. You could do this on CFDs. Could do this on gold and silver. Um, I've just mostly done the euro dollar. Okay, it's a pretty traditional, popular currency pair to do this. That's where I've done it. I did back test. Oh, by the way, I wanted to show you one more thing on the euro dollar. So while I'm looking at this, so these are my results, and this is what my plan is to continue with. Um, um, my plan is to continue with the euro dollar because I've had a lot of success with it, and there's a lot of eyes on the euro dollar. So I think the randomness factor that I was talking about earlier is perfect with the euro dollar because one of the things I've noticed is um, you can only have so many days where the market whipsaws before it's going to have a breakout. And you can only have so many days where it only breaks out and then whipsaws because half the time the market breaks out and half the time it whipsaws. Okay. And so for me, I think what I'm trying to get at here is um, if the market were to only break out, we could be millionaires next week. Okay. And if the market were to only whipsaw, the same thing applies. Like we could be millionaires very quickly, billionaires. But so the market's random is what I'm trying to get at. So the market's perfectly random. And so because of that, that's why I increased the contract size ever so slightly, not slightly. I increased it by 1.5 times. the following day if there's a losing day the previous day. And I do that until I get that big win. And then I default back to the same default contract size, and then we continue on. So, like I was saying, if the market were to just perfectly break out, no whipsaws whatsoever, I would just throw 1,000 contracts on that trade every single day because I'd be so confident in the win. But because the market isn't perfect that way, it is in fact random in nature. And half the time it's going to do a breakout, and the other half the time it's going to do more of a whipsaw style. The only thing that's guaranteed is that you will, in fact, take a trade every single day. That's the only guaranteed thing. And so because of that, we have to work with the contract size to get it just right. And we have to work with the RR ratio to be able to make this work. Okay. Because of that randomness. Because this is not a strategy that you're really, it's not like you're looking at COT data to give you an advantage. It's not like you're looking at some kind of indicator to give you some kind of edge in the market. This is very much just working off of the randomness of the market and then exploiting that randomness through your savvy in terms of your RR ratio and your subsequent planned increases in the lot size in the following days to come. So that's how this works. That's where the money is made. It's not because we're just so smart at picking the direction. We're not this strategy is not designed for that. We have other strategies for that. That's why we use the COT data, and that's why we use, that's why we have COT data, and that's why we have the price action trades where we look at break of structures. This doesn't do that. This is just all about taking advantage of momentum. That's it. And then, like I mentioned earlier, your ability to mess with your lot size and follow your plan. Okay. That's why this works. Okay, so let me show you guys this. So when you do, like last month, I did a 2x multiplier, and I did this on a live account actually. So this is like real, like I did this. I kind of look at it in hindsight and I'm like, man, I was crazy for doing this. So this one was like a pure martingale though. Okay, this is one where I doubled down on each trade um in May. So if I had a losing day, I would double the next day and then I would double again. So starting like I'll show you right here. So right here, I started with a 0.025 on May 6th. It lost. So the next day I did 0.05 or zero point 0.5, and I lost both directions that day. So the next day I did 1%, and I ended up losing both directions at 1% apiece. The next day I did 2% in both directions, and I ended up winning both of those trades. And that's how I made a killing on that. Like that was a killer day. The next day, and then the next sequence, you have 0.25. I lost both directions that day. The next day, I lost zero point 0.5 in one direction. The next day, I lost 1% both ways. And then I won this day right here at 2%, and I made up for it. Okay. Worst period was right here. I had 1, 2, 3 days in a row. No, 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 no. 1, 2, 3, 4. Oh, I kept the lot size the same this day. So because I had a slight win, it was like a break even day. So I kept the lot size the same here. So I did one loss, two loss, or say one loss, a break even day, two loss, 3, 4, and then I had my win right here. Okay, so that's the deepest I ever had to go. I had to risk 4% on one trade. That's with doubling. So I don't really recommend that because that's a lot of risk to take, guys. To risk 4% on one trade. It did end up working out, but it is a lot of risk. And so I wouldn't recommend that you guys do that. So just an FYI, like the pure form of martingale to double down, I do not recommend. Please don't do that. I know it's very attractive because if you look at the results here, it made 25K. Yeah, it's super attractive. It's like a 25% return in just over a month. Okay, very attractive. But like imagine this. Let's say we didn't win this day. You would have had to continue to double for like 3 more days until you got a win. And by that point, you've damaged your account so badly that you can't really recover because you've just damaged it so badly, right? So I got away with this. Okay. But I'd be confident enough to say that if I were to keep doing this at the doubling method for several months, I probably wouldn't get away with it. So I just kind of got lucky here on this one. That's why I've adopted this because the risk is so much less. It still makes a dang good return. Like it made over 8% in just over a month. That's still a dang good return. And the risk is so much less. The biggest trade I ever had to take was on the 24th of May, and I had to do a 1.94% max risk trade. And the biggest equity drawdown was 6%, was about 6% max equity drawdown. And and that's okay. Like that's pretty normal stuff. My game plan as well. Here's another limit I'm going to tell you guys right now. So this is what I've been using. This is what I plan to continue to use is this 1.5% leverage. So if I have a losing day, I increase by 1.5. Um, that's my game plan. And then my cap is at 1.94. So I'm never going to go over this number. It's just a personal, I think it's a smart idea to not go over that number because if you go over that number and you start doubling down and so on, like you could lose a significant amount of your account that it may not even be worth using the strategy. Okay. So I'm going to follow the sequence all the way up to this point. So far, I've never had to go over this point. If I need to go over this point, I'm just going to cap it anyways at 1.94. Okay. So just under 2% is what I'm going to cap at. All right. Let's see, Muhammad says, I can imagine for most people, once they experience something like that, it's hard not to go for it again. Oh, yeah, for sure. Like, yeah, well, like for me, that's exactly how I feel too. Like, I got away with this in May, doubling down, and I got away with it, and it worked very well. But I can almost guarantee that that would not continue over time. So because of that, that's why I'm going here. It's a return about 3 times less, but the risk is so much less though. Like you're so much safer in my opinion if you stay at this level. It's something a lot more sustainable in my again, it's just my opinion. I could be wrong about it, but like so far I kind of thought through the risks of this and I'm like this could be fine. Like even if I had to like stay at 1.94, um I would have won I would have made enough money in these other days that it would have been okay. Like I'm sure it would have been fine. So, so that's my plan is to cap there. It's definitely a game plan. Not going to go over 2% risk per trade. If need be, I won't go over that. So this is really, really good. All right. So anyway, any other questions about this, guys? So yeah, you can use other currency pairs. I would probably stay with the euro dollar. That's what I've back tested. I did look at the pound dollar last month and the results are not as good. There were a couple more times where you had to increase the risk than the euro dollar. So I feel like the euro dollar is a little bit better in that respect. So I'm probably gonna stay with the euro dollar. But I like it. So let's continue. Last night, some of you guys indicated that you had a win. I ended up getting whipped both ways last night. The night before was a win though, which was good. So my plan tonight is to um, set up both trades at 0.38% risk. If you ended up having a winner last night though, just plan to go back to your default in your own journal. I know, like I said, I know some of you guys won, so just go back to your default. Since I lost, I'm going to continue on to my sequence here at 0.38% risk, and we'll see how tomorrow pans out. Let's see, we have tonight and we also have Thursday left this week to trade this. So hopefully we can get another solid win before we wrap up the week. Wouldn't like to, I'd like to have a clean sequence going into the weekend, which would be really nice. All right, guys, I'm going to go ahead and wrap up. We do have caught report in about 7 or 8 minutes. So hopefully I'll see some of you guys there. But I appreciate each one of you. Thank you for coming. Have a fantastic rest of your evening, and we'll see you guys in the next webinar. Thanks for coming.